Welcome back to the weekly portfolio update video. The portfolio currently sits at $9,600 and is down from the previous week, as I'm sure majority of investors are as well. I actually took a photo of the stock market sectors across the span of 3 days, and look at this. One day it's mixed but mostly red. The majority of stocks are in the red and there are some patches of green. The very next day, everything is green and the market looks like it has shown some resilience, and actually for once, the main sector down was energy, with oil and gas. Then the third day, right back to red, and this just shows how volatile the market has been, even in just a span of 3 successive days. Today I just wanted to highlight some of the changes I've made to my portfolio. They're very small, but I wanted to ensure that I'm always fully transparent about what is going on in my portfolio and the moves I'm making. I made the decision to sell a portion of my Alibaba position. I sold about 2/5 of my position, and I understand it's a horrible time to sell with the stock being down so far already, but I can only see the stock falling further. There seems to be no bottom line for this stock, and it seems like I'm just catching a falling knife. And with the price of other stocks being so good right now, I figured I could use that capital to buy more into companies I'm more certain on and I have more belief in for the long term. I still believe in Alibaba, and I still think it has potential to be a great company and end up being a great stock, but I think I'm more comfortable moving my money now out of it and putting it into where I decided to put it. Looking at where I moved my money, I moved it into 3 separate positions. I invested $73 into JP Morgan. JP Morgan has been getting smashed recently and has gone down and down and down to a price where I'm happy to buy into it. I understand, with all the issues going around the world and the possibility of a recession, getting into financials might be a risky play. But JP Morgan has been buying back shares and they offer a great dividend, and it's something I believe in. And it's another way to diversify my portfolio into more sectors than just tech. I already had a small position in JP Morgan, and this little bit extra will just nicely bring down my average cost and hopefully allow me to get more and more dividends paid into me, as Alibaba didn't pay a dividend, and hopefully this JP Morgan position will grow over the long term as well. The second position I put my money into was my favorite company and my largest position that isn't an ETF, and that was Apple. Apple is just a perfect company. It's always said to be overvalued, but the company continues to produce and bring out quality products, and I can't see them slowing down anytime soon. Even though they're such a giant company, I can still see growth in them, and I feel more stable putting my money into them than I do putting it into other sectors and other stocks. So I ended up putting $65 into Apple, and my third position I invested into was Google. Google does have the upcoming stock split happening, and I still believe in the company. They had an amazing growth in recent years, and I still think there's more opportunity for growth. Google seems to be going in all the right directions, and I want to increase my position in Google right now while the stock's down and I can get in at a great price. So I put $65 into Google, $65 into Apple, and $73 into JP Morgan, which is from the $200 from selling Alibaba. Yes, I took a loss on my Alibaba position, but I think the position is going to continuously fall. I think this is a good time to get into Alibaba, but I think for myself and my investment strategy and my risk tolerance, I don't think this is the right time for my money to be in Alibaba. I plan on holding the rest of that position for the long term and seeing how it plans out, because realistically, now that I've taken 2/5 of the position out, the rest of it being there won't make too much of a difference. This just allows me to have some extra money right now and buy into stocks that I believe in more at a cheaper price. When I look at my portfolio, Alibaba and Facebook are 2 positions I continuously added to over time, and they're 2 positions that hurt me a lot with their recent falls. My Alibaba and Facebook position have fallen both over 40%, and that has dragged down my portfolio's results. That doesn't mean I think it's a good time to sell out of them. I'm not selling out of any of my Facebook position right now, but I think getting my money out of China and putting it in the US is a much better move. Another reason I chose these 3 positions as well, of JP Morgan, Apple and Google, is because I believe all 3 of them have a chance of outperforming the market. Normally, I just put my money into the S&P, and that's what I've been doing now, especially as it's been falling, as it's a lot safer. But I figured I've been doing that so much now, I might as well pick a few stocks that have done me well, or that I believe will do well. I believe in Apple, I believe in Google. JP Morgan is a bit more of a riskier one, but with the dividend and the increasing price fall, I think it should be a good entry level point. Overall, these are the few moves that I've made to my portfolio recently. I think during these tough times, sometimes just holding on to your stocks and your current positions is the best movement to make, especially when you saw how volatile it's been over the last 3 days. Moving your money constantly everywhere into different sectors, trying to find what's hot, will end up just losing you money over the long term. Holding on to these great companies and buying into them when they are discounted is what will make you money, and holding them for an extended period of time. This was a quick look into my portfolio. Leave your thoughts on my portfolio and these decisions in the comments, and leave a like and subscribe to Business Ventures for more weekly business content, whilst I track my portfolio through the ups and downs of the market with full transparency.